A lot of developers actually like contract work, and some of it's not so much because of for income or for monetary reasons.
To give you some context, in the US alone, that market of people that work part-time is about 30 million people. In some of these companies, they have a reliance, and I'll call it a fudge factor or wiggle factor, of anywhere from 5 to 10% might be this flexible type labor that they rely on.
The retail sector is gearing up more this year than it was, say, last year, prior years. This reminded me of when Excel came, and he said Excel didn't kill accountants. What it did is it killed the accountants who didn't learn Excel.
Those large employers do not employ the bulk of the U.S. workforce.
Yeah.
It's about almost 70% of the U.S. workforce is employed by companies with 20 or fewer employees. So it's small business, and small business remains stable and holding their own.
Okay, everyone, and welcome back to the Trade Ideas channel for what is the first in an interview series, which I'm really excited about, where we are going to be interviewing CEOs and prominent figures of the publicly traded companies out there. Now, just to get it out of the way for compliance reasons, right? Even though we are talking to CEOs of companies that are publicly traded, none of this is investment advice. We're not telling people to buy or sell any particular securities. As you guys know, we are a software and a content provider over at Trade Ideas, but I am very excited to introduce the CEO of ShiftPixy, Scott Absher, and we're going to talk about what he sees in the economy today when it comes to the gig economy, when it comes to looking at where economic patterns are going, job numbers, which we all know the Fed are watching really, really closely, and any kind of insight we can get there. So welcome, Scott. First of all, I'd like to just give us a little bit of a overview of what ShiftPixy does, where you guys are now, where you guys see the future before we kind of bore people too much with economics.
Yeah. Well, good. Good to meet you, Michael. Good to be with you, and thanks for having me aboard. Yeah, we pay very close attention to what we call the human capital markets, and that's the movement of people in work opportunities. And our particular focus and what we were built for, what ShiftPixy was built for, was to help reconnect people that had been kind of disconnected from, especially part-time or variable labor. They were disconnected by virtue of the very thing we're talking about, the gig economy. What happened was in a lot of industries that relied on part-time labor, and for example, we do a lot of work with restaurant operators as an example. And in that industry, there was always this time-honored tradition of 100% turnover. So anybody that was starting on the payroll in January would likely not be there by December. And that was just the nature of the business. Well, fast forward to about 2015, and more new data started coming out. And those numbers in many markets around the country had gone to 300 and 400%. So that meant that somebody that started in January is quite likely not even on the payroll in April. And the attribution for that, as we got into the research, was that the gig economy and all these related platforms, whether it was Uber, Lyft, DoorDash, Instacart, as an example, all created new opportunities for people that were dedicated to part-time labor. So if you were a brick and mortar operator that relied on part-time labor, now you were competing against this new technology anomaly in the market. And so that's what we focused the business on, was actually reconnecting brick and mortar operators and providers of work opportunities to those that can do that kind of work on a part-time basis or variable basis.
So that's first of all, that's very interesting, and I think this conversation is going to be very, very timely because again, the Feds and the market seem so tightly focused on job numbers and employment right now. It seems to be where that focus on where interest rates are going and where the market overall may be going a little bit in the future. So just a couple questions right off the bat, just to get our definitions right. If somebody doesn't know the term gig economy and they haven't heard that before, can you just describe a little bit about what you mean by gig economy, what these people are trying to do, how long they're working for, that kind of thing?
Well, in the old tradition, people remember like musicians would talk about gigs. It was usually a one-off opportunity to perform, and it was probably not regular work unless unless they're a touring band or something like that. So those were always referred to as gigs. In the current economy, that reference is to temporary or occasional opportunities to work or earn income, but it's really driven by technology. The rise of smartphones has made it very easy now for people to, if let's, and I'll use myself as a college student as an example, and I'm an old guy, so I'm dating myself. The old days, I would go and talk to somebody in an employment office on campus, and he'd have 3x5 cards with opportunities to go to work.
Yeah.
Now people just have to fire up their phone, and if you're a student or you're just maybe you need to make a few bucks extra to pay for insurance or gas or whatever. Everybody's got their struggles in an economy like this. Now you can just fire up your smartphone, and on one of these platforms, you can pick up a gig or some income on an opportunity type basis.
So that's interesting, and you're not dating yourself too much. You see some gray in the beard here. I remember that as well. You'd be looking for maybe a little extra beer money on the weekend,
Yeah,
or you got a date, and you're like, how am I going to pay for this? So you just look to see if you could make a couple bucks out there.
right.
Is that what you're finding with most gig workers? That these are either, let's say, students or even people with full-time jobs that are looking for additional income or additional employment? Or do you see many in the way that this is how they want to work? Because, for example, so Trade Ideas, again, we are a tech company. We build scanning softwares, and we try to make it so that our investors and traders can make better trading decisions. We have noticed a big push on the development side where a lot of developers actually like contract work, and some of it's not so much because of for income or for monetary reasons. It's more of that flexibility. We come to you and we say we want to build out this, and here's the start point, and here's the end point, and this is kind of the time frame we want it, and they enjoy that. Are you seeing that kind of push towards people working in this gig fashion permanently, or again, is this people with full-time jobs that are looking for additional income?
There's some of both. We're a technology development company as well, and one of the things that has kind of changed in technology, and it's going back probably 20 years ago, was the idea of agile.
Hmm.
Being flexible and being able to move or run a sprint to get a project out or a new feature out. What you're seeing too is that people like that kind of work in general, especially in the labor markets and part-time labor. And to give you some context, in the U.S. alone, that market of people that work part-time is about 30 million people, and so it's
Wow.
a pretty good sized chunk of the market. But what's contributing to that are people that also are looking for some sort of side hustle. To your earlier point, where they used to use a term, or the Department of Labor did, called underemployed, and the idea was that somebody had a full-time job, but it wasn't quite meeting the need, and so. And the old tradition would be that you work nights or weekends in retail or in a restaurant or tending bar to hustle up a few extra bucks. So what you are seeing now in these gig platforms are providing that flexibility is the idea that somebody could pick up a side hustle and pick up a few extra bucks. So and again, it's not so much about being agile, but the opportunities become more agile, and I can find them easier, and I can adapt to them. I can switch on, switch off my availability, but it's meeting a very big demand, especially in the current labor markets.
So that actually just created two questions in my mind. Because first of all, again, I'm always approaching this from a investor mindset, which is again what our clients are doing. So the first is, do you think that this this rise, and I know because of what you guys built out and what you're focused on, that you believe the gig economy is going to continue to grow. How do you think that this would benefit businesses' bottom line? Because when you started talking about agile there, that made me
Mhm.
think that even if I'm a restaurant or a bar or something like that, the ability to adjust my cost based off how much and for how long I pull gig workers in seems like it would be a bottom line or at least a cost reduction boost. Do you see any correlation between the businesses that are using gig economy and their ability to fluctuate with economic environments and cost?
We
And
do.
do you have any sort of way that we know which companies that these are? Because again, to me, that's interesting. Because if your revenue is your revenue, you're either going to pull in money or you're not, depending on how things are going. But the ability to fluctuate this cost side of things pretty rapidly, I think, is really, really interesting. Something I just thought about.
Is in fact one of the things that we started a project actually a couple of years ago. We sponsored a SPAC. We were actually preparing to sponsor a series of four SPACs, and the focus for the SPAC that we sponsored was industrial human capital, and and it was what we were intending to use that vehicle for was to acquire mom and pop staffing companies, temporary staffing companies around the country. It's still a very mom and pop industry, but it serves a critical need in the marketplace, and it's specifically for this idea of flexibility in labor. And what we learned as we got in there and we started looking at the companies that we were intending to acquire was that you saw big names pop up in the client list, all the big box retailers, food manufacturers, you name it. There were all brands and companies that everyone would recognize. And what we learned was that in some of these companies, they have a reliance and I'll call it a fudge factor or wiggle factor of anywhere from 5 to 10% might be this flexible type labor that they rely on. And the idea is, again, to be agile. Think about it. Retail's done this forever. They have seasonality, and they gear up for their holiday season, and
Yep.
then they gear back down.
Yep.
So what's happening is that's happening across other sectors of retail, but also sectors of manufacturing, where they can scale up when they have a production crunch time, and they can scale back down. So we're very focused on that. In fact, what we did in our particular case, that market sector is so intriguing and so valuable that we shut down the SPAC last year, and what we've done now is we're in the process of acquiring a number of these types of companies around the country. Again, because for us the motivation is margin. The margin is very good compared to our legacy business, but these are also blue chip clients. And we see that trend is actually escalating, that need to be agile. And we think in our particular case with our technology deliverables, we're able to do that at scale where nobody's really been able to do that in the marketplace and provide real time business intelligence that doesn't exist in the market. So yeah, we're very bullish on that sector of the market
Yeah.
and the movement of that market.
Yeah, that's interesting, and again, it's something that I didn't think about. Now, this is something, and again, I don't know if it's your business model, but just an idea I want to float out while we're chatting here live is that data for investors, I think would be very powerful. Where if I know, for example, that not so much company by company because that might be privacy issues, but even the retail sector as a whole is gearing up more this year than it was, say, last year or prior years for Black Friday or something like that. That to me is as an investor, that would be very interesting data, which is kind of cool. But speaking of the data you guys get, have you looked at all the correlation between gig economy workers and what I guess the FOMC and all of these reporting agencies for the government would consider full employment? Is there anything that you're seeing there now, or is there anything that you see in correlations? For example, I'm thinking that, maybe in hard times, people are looking for more gig work, and in easy times, people are looking for less. But have you noticed any correlation between those two? And are you seeing anything right now that investors could kind of look at and say, maybe the job market is stronger than people think or weaker than people think, or is it right in line with whatever all the economists are saying?
I think from where we sit in the marketplace and what we're observing, yeah, COVID was a very big indicator, and we were able to make some really interesting observations during COVID. And one of those was wage pressure was going up.
Hmm.
What you saw was that the trend was that the average hourly wage was scooting up to $20 an hour especially in fast food.
Wow.
And so that trend has continued, but we now see that, I would say, stabilizing. I would say that the balance of power is actually shifting back toward the employer, the one providing the work, but not aggressively. And I think that that shift backwards is providing what I would consider more stability. And you're seeing also post COVID, and as part of the calculus for much larger companies, they're delevering some excessive overhead they had. So you're
Okay.
seeing a number. When you hear the layoff numbers, these are companies that are just delevering excess overhead. Their business is probably stable, but this is an opportunity and a window for them to delever that fixed overhead. But for us, that actually creates a great opportunity as well in that agile or flexible human capital space,
Hmm.
because what also you might think instinctively that if those numbers are declining and those companies are stabilizing, that they would not have a need for that flexible labor.
Yeah.
But it's quite the opposite. There's actually every company that we're looking to acquire has seen incremental growth over the past couple of years. So that really is more of a testament to larger companies trying to find ways to be more agile, and fixed overhead in human capital is one of those ways they can do that.
So when you see this trend of companies wanting to be more agile, now I hate to use the big R recession word, but is that what you're seeing, or is this more of a is it more of a defensive stance? Like, if I'm a big company and I'm going more to the gig economy as opposed to regular, just hire and keep these workers. Is that a sense of, okay, I'm going on the back foot, I'm going in a little bit defensive because I'm worried about what's going to come, and I want to have that flexibility? Or do you think that's just a longer term trend in which companies are just waking up to the fact, well, the more flexible things are for me, it's better, and even if I have to pay a little bit more to the worker, that's still better because I have that flexibility. So is it, I guess it is a reaction to what happened in 2021, 2022, a prediction of what's going to happen in kind of 2024, or is this just a trend where you think you're just going to see more and more in the gig side of things as things go forward?
Well, in technology, for example, I think a lot of companies learned a lot during COVID when they let people work remotely. I think they recognized that the people that they had on projects, or the people they had doing the work, were probably only putting in half of their time, and the other half of their time was being squandered doing something else.
Hmm.
And I think that was a wake up call for a lot of companies that had expensive technology force or development force. I think they saw that there was a way to maybe streamline that and tighten that up a little bit. But I also think this is where AI's had an impact in technology. ChatGPT, as an example, has the ability to take an average programmer or software developer and make them a super developer.
Hmm.
Uh, Writing code, being able to write code, at 10 times the pace and rate. So companies are also looking at that as a way to become more agile. But in the blue collar labor markets that we focus on, you don't see those types of opportunities for automation. You don't see those types of opportunities where physical labor is being done.
Yeah.
Those traditions remain intact. But the idea of being more agile in keeping my overhead flexible as opposed to fixed, a lot of companies are trying to get there. And again, it's a great time to be where we are in the labor markets, to be sure.
Yeah, and that's super interesting. So, you brought up the AI word, so we have to go down that road. How much do you see AI? And I think you've already hit on it, but just get you to expand a little more. How do you see AI potentially replacing some gig type economy workers? How do you see it bolstering in some way? And I guess this is partly a selfish question because I could see in 10 years they just take a picture of me and there's an AI interviewing you. And I'm not going to lie, when I was researching this interview, I went to ChatGPT and it read me a bunch about ShiftPixy, and I asked it some sample questions, and a lot of them were bad, but I am seeing it's already boosting a lot of what I do and a lot of what we do over at Trade Ideas. Is this something that you guys think will help match gig workers with economy? Do you think it may replace some gig workers? I agree that the guy who's moving the manual labor right at a construction site, he's not worried anytime soon. But how much of this do you think is a replacement? How much do you think of it as an enhancement? Kind of what's your overall thought on what we're seeing in the AI landscape?
We've been very active in AI development from very early on. When we started our development journey back in 2016, what we saw was an opportunity to take what is a very manual process when you're managing human capital, especially part-time human capital, and you're trying to do it at scale. There's just a lot of hand holding, all the way from finding somebody to come to work, to putting them to work, to shepherding them through a work week, and then managing them through the dailies. And that's always historically been very manual. So we saw an opportunity to use AI to kind of replicate that human interaction. One example is on the front side of our engagement. When somebody comes in to work on the ShiftPixy platform, they go through an application process that's all driven by IBM's Watson. And it's a
Okay.
chat conversation that they're having. And by the time they're done, they spend about 20 minutes. And in the state of California, a new hire package generally runs about 30 pages. So
Wow.
they complete that process with a chatbot in 20 minutes. They've taken a picture of their ID and their the driver's license, etc., and they've completed that process and were able to onboard. So that was one of our early use cases for AI. But further on, what we learned was that even during process, especially in part-time labor, where people, a lot of employers want to treat it like a marriage as opposed to speed dating. You should be able to know in 5 minutes, what could I put that person behind the counter to
Hmm.
interact with customers. And so what we saw an opportunity to use AI to capture features and attitudes and that sort of thing about candidates, and get them tucked in front of a prospective shift manager right away. Do it very instantly. Instead of a manual process of calling somebody, tracking somebody, we use AI to completely manage that process. We also, the last mile for us was on the recruiting side, and we've used AI to keep a full bench of active employees to kind of curate our worker population, and to always show them things that might be of interest to them, and always continuing to curate the population. And AI is perfect for that. It's able to be very personal. It's able to love on people where you don't have enough human bandwidth to really do that,
Yeah.
and for the types of population we're scaling for. So I guess when I talk to folks about AI, especially in broader industry, I said, think of it as an opportunity to delever some rudimentary human processes. However, on the creative side, think about it in legal.
Yep.
in creative, in a lot of those disciplines, especially anybody that makes their living writing. That's where you're going to see, I think, the biggest upheaval.
Yeah.
So a lot of the thought workers are probably it's either going to be an enhancement for their business life, or it's going to be a impediment. And I hope most of them. I know our technology development team internally has embraced it. We embraced it very early on. We're using Chat GPT to fast track projects and features. And it's been a great tool. And so hopefully, most businesses, I get the sense when you listen to CEOs talk, everybody's looking at how is there a use case for AI in our business. Like I said, in ours, it's been instrumental to our success.
Yeah, and I would imagine, and you can correct me if I'm wrong, that going forward, I think one of the main things that I would want to see on a job application or even for a gig worker is the ability to use these tools.
Hmm.
I had an interesting conversation with my father, who owned an accounting firm before he retired. And when I showed him this, he was blown away like everyone else. But then he kind of laughed and he said, "This reminded me of when Excel came," because he was an
Yep,
accountant long before Excel. And he said, Excel didn't kill the accountants. What it did is it killed the accountants who didn't learn Excel.
that's
If,
right.
in a couple of years when I was hiring people, if they came in and I said, show me how you do ledger entries, if they had an actual physical ledger, go away. But if you
That's right.
understood the technology, I think that would be a big boom. So I'm going to ask you one more hard one before it goes, and this is for all the investors and traders out there. Based off what you're seeing, are you thinking that we are going to continue to increase jobs or decrease jobs overall in the economy this year? And the reason I think that's such a focus for traders right now is it's a lot of what the Fed is looking for. If the job market slows, then I think people are more inclined to think the Fed is going to cut a little bit this year. If the job market increases, then it may halt cuts or it may even lead to a raise. Based off what you're seeing, and we're obviously not going to hold you to this, we're just having fun. Do you think that that job market is going to accelerate further out, or do you think there's going to be a little bit of a cut? And when that happens, do you think it's a switch to gig workers, or do you think it's a completely say a cut or a boom for the full-time employee?
I would say our outlook is that the labor markets are stable.
Okay.
Even though you see large companies laying off blocks of workers, that's those large employers do not employ the bulk of the U.S. workforce.
Yeah.
It's about almost 70% of the U.S. Workforce is employed by companies with 20 or fewer employees. So
Hmm.
it's small business, and small business remains stable. I mean, with some noted exceptions through COVID, because of restaurants as an example, but small business is very stable and holding their own. So I don't look at to see any major decline. What I do see is an increase in certain areas. One of the areas that we're focused on are skilled trades. We have a group of four companies that we're looking to acquire that put carpenters, electricians, and plumbers to work. And we're focused on that on a couple of fronts, but there's a shortage of that type of labor. What you don't see are young folks coming out into the workforce out of high school and going into an apprenticeship under one of these skilled labor trades. And these are very good jobs. These pay very well when people learn these skills. But what we're also seeing is that because of the onshoring movement that is really taking hold in the U.S., you got chip manufacturers, you
Yeah.
got people like Tesla, you got some major manufacturing influences that are reestablishing themselves. And all that's going to do is create more jobs and more opportunity. So we're very bullish. And again, for us, we're rather selfishly, we're in the right place at exactly the right time for that type of boom. And I think people should be optimistic about the employment side of things.
That's good, and I like that. I like that comment too of seeing a shift, right? From I know a lot of people are always focused, and you're right when Meta lays off 10,000 people. People think that's a massive deal and we should all react to it in the market. But you're right that the smaller companies employ the vast majority of people out there. And you're seeing this shift from these, devs and workers like that into more manufacturing type things. So I think that's absolutely fantastic. So before I let you go, is there anything you want to leave our audience with? Any thoughts of kind of the market, or a little bit of a plug of where they can check you guys out?
Yeah, well, they can shiftpixy.com. We trade on NASDAQ under the ticker symbol PIXY.
Mhm.
And, stay tuned. Like I said, we're very bullish about the labor markets, but we've got a lot of reasons to be excited. Our growth is by virtue of a lot of acquisitions we've been working hard on. And I think people will see over time the real value of that part of the labor market, and how vital it is to uh, uh, industry in general. And it is a great place to play, and it's a great market to care about. Most people ignore it, but
Yeah.
it's a great market, and it's vital to the success in the U.S.
Well, listen, Scott, thanks for coming by. I think it's been an awesome conversation. I think there's a lot of things that people can grab from it, and let us know wherever you're seeing this in the comments below. At me and at ShiftPixy there for Scott, and just let's keep the conversation going in the comments. Thank you very much, Scott. Have a good day.
Good to see you, Michael.
Good to see you.